but I really wish you could see me on camera, but for whatever reason, I cannot get Zoom to accept my camera. And if anybody's got any hints on that, thank you, Marlon, by the way, please let me know, because I am completely at sea. The technical wizard that I am not is in full swing at the moment. Anyway, you'll have to have a black me at the moment, and I'm sure when Ash comes in, you'll see somebody live and true, but we are here live and true. I'm coming to you live from Tasmania in Australia, and it's good to have you here again for another week of Trading Buddies. This week, a little bit different than the previous 467,000, or however many of there have been, because we will be joined later on by our expert in all things cryptocurrency, which is a wonderful thing because I've got this much understanding. I'm holding up a zero, by the way, of cryptocurrency, and I'm afraid it's just going to have to stay that way because I don't have the time. I probably do have the inclination, but I just don't have the time to play catch-ups with cryptos. Thank goodness we have people like Simon who will be joining us a little bit later in the show. Of course, George's on board as well today. He'll be talking about his 5-minute strategy and going through the indexes with us and seeing what's tradable for him this week, if not today. Ash, of course, joining me very, very shortly with all things footsie. It's Monday, so you never know who may have a trade up his sleeve. I'm looking at pound versus the US dollar at the moment, as I usually am at this time of day, waiting for a breakout. Well, a bit late, eh? It's all happened. And since Friday, the US dollar has just gone kaboom. Not unexpected, of course, given the stance of the Fed over the last few weeks anyway. And again on Thursday evening my time, that son of a gun, Jerome Powell, suggested that they will be going far more aggressively than was previously semaphored. Bugger. Because I was in a short dollar CAD, and I'll go there right now, actually. We got in short on dollar CAD, I think, on a daily bar, this one here. We traded that short. Fortunately, we took some money, put some money in the bank round about here somewhere, I think, but failed to bank twice. And, you know, in retrospect, if I could have my time over, I probably would have put a second amount in the bank right there as it hit this strong support level, and not reckoned, or I wasn't reckoning at the time, that we'd see bang, bang, and currently today a third bang in a row as the dollar just goes nuts. As I said, we won on that trade, but gee whiz, we left a lot on the table as well that the broker has now got safely tucked away in his cache, not CASH. Anyway, that's kind of led me to do two things. As you know, if you've been following us for a while, I had 3 trades in the market last week, all with the CAD, all going with the CAD. Dollar versus the CAD, Kiwi versus the CAD that we've had in the market since, when did we trade this? About 4 weeks ago now, I think. 28th of March. We've been in this trade since then. Target's here, and we are getting closer to that target, only 50 pips away now. But what I have done is taken some more profit today and moved them off. Or was it today? It may have been Friday. I can't remember, frankly. The stop loss is now at 85.40, and the target is at 83.50, just above that support level that I've drawn on the chart, which represents this level here. We have already banked twice on this one, so it's not that critical that we get out here. But I don't want to leave the same or achieve the same result as we did on dollar CAD and have all of that profit taken away from us. So we have tightened up our stops. I've done exactly the same on Aussie CAD. Aussie CAD hit this second take profit target of mine today sometime. That's been going super, super well today for whatever reason. Don't know why. I think the Aussie's having a shocker. Not surprisingly, again, given the interest rate differential that now exists between it and certainly the CAD, certainly the Kiwi, certainly the US dollar. And I would imagine until the RBA decides that they've had enough and do look to raise interest rates, then this will probably be a continuing story. Now, I know, and of course, commodities are going to play a big part of this as well. And I haven't checked the commodities, don't know what they're doing, but I would suggest by the look of the market here today that iron ore, coal in particular are probably off the boil. We shall see. I'll have a good look at that and see where this is likely to go. Look, I think there's a massive target on this, to be fair. I don't think it's even there, but I think that's kind of the safer way to get out of this if we're fortunate enough to get there. But that said, again, going back to the dollar CAD, and I'm not suggesting that this will reverse in the same fashion, given that we don't have a Jerome Powell speech coming up. Well, the equivalent of that on the Aussie, let me put it that way. So I can't see this reversing in a big hurry, but I have tightened my stops on this as well. We're now well below entry. I think actually I was going to move it again to there. I haven't done that. Thought I put out a post earlier on that saying that I was going to move that to there. And I think that's probably a reasonable thing to do. But instead, what I did was take second profit at that level. And I'm going to leave my stops there for today, and we'll see how that pans out. May move it tomorrow. We shall see. So that's an update on the trades that we are in. Hopefully you guys are still in those as well. I've got nothing else in the market currently, but what I do have is a control panel that's out of control, and I can't see anything that's going on. So I've got no idea who's in the room. Let me see if I can fix it. Had this problem yesterday. Hello, buddy.
No, mate, your camera's not on, by the way. I don't know whether that's...
No, my camera's working, but I just cannot get it to take to Zoom. Same thing happened to me yesterday.
Yeah.
I don't know. Don't know what to do. I've tried everything possible. I've troubleshot the camera. The camera's working on the computer, but for some reason, Zoom won't handle it.
Oh,
so
okay.
I'm sitting here in the dark kind of thing.
Yeah.
Some would say that's a blessing, but, you know.
You're a shadow. You're a shadow.
How was your weekend, mate?
Oh, do you know what? We had an IFP event on the weekend. So yeah, it's tiring, but really, I mean, it's, you know, I always kind of I always approach the weekend with a bit of trepidation, but as soon as I get going, I really enjoy them. And just because I'm up at midnight and staying up until 11 a.m., so it's my body clock is just all over the place. But
yeah, that's a big day.
Yeah, well, it's a big weekend. I mean, it's Friday, Saturday, and Sunday.
I've normally got a sore elbow if I do that.
That I'm doing that. So yeah, I do approach it with a bit of trepidation, but it was really good, mate. Really good, and I think I mean the strategy's working really well. I mean, I can show you really a couple of things actually today, which I think are interesting. Firstly, the FTSE. Obviously, those. Let's have a quick look at the FTSE.
Cool.
There we go with the FTSE. Just a complete waterfall away to the downside with the FTSE. I've got a sell here. I've got a sell here. Got a little buy here and another sell down here. I'm looking to sort of take profit on. There's another sell down there, and that's the one I'd like to clear really. So get down here and take the profit on this one. Leave these ones on and see if we can get a bounce. Now that's not really kind of strategic that somebody can really implement. Oh, you're not getting my screen, are you? I've just realised.
I can see Zoom, yes. But in fact, I'm having a really bad time with this technology.
There we go. That's better. That should be better. Yes. So sorry, we got some sell. We got some sells in here. Sells all along here. I managed to sell the high on when would that have been? Thursday maybe, and I got another sell in here. I bought this area of support, but there's also a sell here, and there's another sell down here that I'd say I like to clear this one out really before I really commit to a bounce. But the bounce point might be quite a way down. You know, when you start to look at this on a weekly chart, the suggestion might well be that that the low might it could be down all the way down here. So that's one of the reasons I'd like to leave these shorts on up here and just see if there's a bit more room. Now there's a possibility that we just break down again and come to this point before we start to see any sort of retracement. You were talking about the Aussie today. You know, in some respects, no major surprise. Commodities are really getting battered today. And when you look at the oil chart, this is, you know, possibly, you know, one of the reasons we're getting the kind of reflection on the CAD. Oil is starting to ease down as well. And in some respects, it was inevitable that we were going to get a move. Not necessarily inevitable it would keep coming down. But with this kind of vicious volatility, really, it was not sustainable at these levels. Nice gentle moves up here, nice gentle, and then all of a sudden explosion up. So because of the dynamic in the world, there's always going to see, you know, be some specific price action that would probably be more vicious than we've seen, you know, prior. Just a quick look on some wave riders now, just because there are possibly people in the room. Now, I can't go back too far because some of these haven't yet hit target, but this was a really, really nice entry here. And but blow that up a little bit. This here was a really nice entry, and I'm hoping that people can see why. Perfect bar, perfect area for a bounce. Now, the area actually was there's a little horizontal level that exists around here. There's a horizontal level here, and if you look back, you can kind of see in a bit more detail why bounces here, a little bit scruffy in that kind of area, bounces around here as well, might even be a little bit lower. But there's a horizontal level that has existed for quite some time. So it bounced off that level. It gave the guys an entry bar and on the dailies, and it has you know, performed really well. Pound yen, I also think is a fascinating one because the pound had been doing really well, but all of a sudden it's starting to ease to the downside. Now the UK economy's got its own problems. Boris Johnson still kind of can't seem to get away from all the bad press that he keeps getting, and there is again this
doesn't seem to affect anything though. He's still there.
No, it doesn't, mate, and it really does sort of come down to what people choose to focus on. Because if we focus on the fact that he is pretty resilient, then we don't really pay attention to anything that's coming out. But if we focus on the fact that at some point it will catch up with him, then I guess it does add some concern into the market. So the pound is starting to ease to the downside, and you know, the dynamics are many right now. We had Macron also actually, you know, talking about that euro dollar. Euro dollar continues to ease the downside, which I think is quite surprising in many respects. We had Macron win the French election over the weekend, and I think that there would have been more justification for a further move lower if it was Le Pen. You know, Macron's pro-euro, he's pro-business, but I think because of the dynamic we've got in the world, everything that is at risk right now is just getting absolutely hammered. So we had the euro moving down, pound dollar as well. Dollar continues to strengthen with the concern that we've got globally. And also, as you mentioned earlier, those interest rate differentials, they are the most dovish. Well, they're most hawkish, sorry. They're the most hawkish, maybe barring the RBNZ. But the you know, the United States rhetoric is getting very, very aggressive, where you'll see in other countries it's just not the case.
And of course, we're seeing that actually it's very interesting, and I'll show you the charts on these in the tick, or probably after George and Simon come in.
Yeah.
I noted over the weekend, not surprisingly, I suppose, if these three major indexes, in other words, gold, the S&P 500, and oil, all put in higher highs last week.
Yeah.
Yet closed on their lows.
Yeah.
And in other words, key reversals. So, and of course, the dollar benefited on the back of all that, but failed to put in a lower low, but kept going higher. So there was a little bit of mismatch there, I suppose, if you like, in the favor of the dollar. So
Yeah,
strong dollar is very, very hard to ignore at this point.
yeah, absolutely is, and you're right, mate. I mean, I'm still not ready to give up on gold. I still think that there's some upside for gold, but as you say, dollar strengthening, those yields are starting to become really attractive now. It puts all other assets really under pressure, and gold's one of them. Gold's under pressure, oil's under pressure. We're starting to see, that dollar pick up. So that's kind of inevitable in many respects. So. I mean, the last wave rider from a couple of days ago, which has now played out, is the dollar Swissy, which there's no question that the dollar is strong here, and it's probably you could pick it up against any of them. This was the entry bar for the dollar Swissy here. If we bring this onto a daily, this is the entry. No, sorry, it wasn't there. It was a few days ago. This one here. This is the most recent entry bar, and again that's bounced off a horizontal level, which is coming across there. So a little bit more profit in that, but getting very, very high. And when you look at this dollar, it is at risk now of just turning around and getting obliterated, just as the stock market was. It took a long time for that to happen, but just as the stock market was, now we're seeing the dollar really in a very, tenuous situation. Let's just have a look at this dollar versus the yen, because this is the one. When we look at this on a weekly chart, look at that, mate. I mean, that is just
I know, it's unbelievable.
Yeah, it's screaming, I'm coming back, and I'm coming back hard. Now, trying to trade that is not easy. But
Charlie Sheen hasn't been that high.
If you try and trade this, you try and continue to trade the dollar long at these points, then I think you are starting to probably be on the wrong side of the boat, because this is well overweighted, and we can see this starting to come down. But we'll get to some more of this stuff later, mate. We got George and Simon in the room, so let's get to those guys. We got Simon coming in to talk about some crypto stuff, which I think is a great time to talk about crypto, because there's blood on the streets, and when there's blood on the streets, we want to be the ones going around with our ambulance and going, oh, actually, that's now an attractive price. So let's talk to Simon. How you doing, buddy?
I'm good, guys. How are you?
Good day, mate.
I'm great. It's a fabulous morning here in London. I don't know what it's like in Brighton, Ash, but it's beautiful here.
Yeah, it's nice, mate. Yeah, it's nice. A bit chilly, actually.
Take a photo, mate. Won't last.
Let me just get rid of this background. That's better. Cool.
There you go, mate. So,
so refreshing to listen to you guys talking about proper currencies this morning.
Oh yeah, what the dollar? Oh, what you mean instead of crypto?
Anything but crypto, right? I've not taken an FX trade for well over a year. I've not spoken about it, and this is really the first time I've ever heard people chatting about proper currency.
Yeah, great. Well, I mean, do you know what?
Well, it's proper for now.
It's proper for now. This is the thing, isn't it? The dynamic has changed somewhat, and as I say, mate, it'd be great to get your view on what's going on in the crypto market, because now people have got their eye off it. I'm interested.
That's right.
This is the time I kind of get excited. I noticed that Bitcoin and others, some of the top ones are again down this morning, but nowhere near as bad as the stock market. They're still relatively resilient as the market does start to crash. And I still wonder, are people looking at Bitcoin as a potential for the alternative hedge instead of gold, and that's why we're not seeing gold take off?
Sorry,
guys, can I just butt in for 2 seconds? George, are you okay to stay and let Simon have a chat, or have you got time pressure?
I can jump back if need to.
No, I'm okay. I got plenty of time. It's fascinating to get some insights into how things work. So I'm around.
Right, mate. Happy days.
Thanks, George.
Cool. Yeah. Okay. I mean, you mentioned that very word, inflation hedge. I run a Telegram channel, which I've been running for 6 months, and I run it for friends and family and colleagues. And all I get, because I know them all, I get personal messages. Are we in a bear market? Are we in a bull market? Are we in a bear market? It's Bitcoin and inflation hedge. No, Bitcoin's not an inflation hedge. If Bitcoin was an inflation hedge, I mean, when you look at it, for me, it's a tech stock, right? It behaves like Tesla. It behaves like the Nasdaq. They're highly correlated. One day will it be an inflation hedge? Yeah, I'm damn sure it will be. But right now, no, it's a risk asset, and it's getting hammered with all the other ones. So one of the biggest questions I always get, and I've been getting for the last few months, is: are we bull or are we bear? So I thought what I would do is just take us through a couple of reasons for both and give you my own thoughts on it. So
that'd be great.
This is let's take this back. This is Bitcoin USD going all the way back to the first cycle in, where are we, 2013. So as you guys know, these things are supposed to have 4-year cycles with ending in a 4-year blow off top. What's really interesting for me is this is the 2013 high of, I think it was about 1,200. Yeah, it was about $1,200. There's the blow off top, and here's the bear market that ensued.
We're not seeing your arrow move around your screen, mate. I don't know whether you're pointing.
Okay, I am pointing. Yeah, no arrow there. No. Okay. All right. That's weird.
Maybe it's the wrong screen. We're looking at Luxus.
Okay, that's the wrong screen.
There you go.
Let me stop the share. Thanks for that, mate.
No problem.
I'll stop the share. Okay. That's not a great start, is it?
It's all right, mate. Zoom sort of like does that to you.
Yeah.
And I've been using Zoom for I don't know how many years now, and I still can't find certain things. You know, like the chat will just disappear.
Yeah, let me stop.
You should have seen me last night in Sunday Market Update.
Jeff can't even put his camera on.
I still can't. I'm still trying.
Is that screen? What are you looking at now? You're looking at it.
Yeah,
right.
Bitcoin USD. Yeah,
that happens to me every week, man. Okay, so there's the 2013 high. Here's the ensuing bear market, and you can see that we break through the high in March 2017. We move on up, and what we do is we break through this 1.618 fib extension.
Yeah.
Once we break through that extension, in the first cycle, we come back down, we retest it, the circle, and we never ever go below it again.
Yeah.
So then we move on to the next 2017 cycle. Let me squeeze the screen down. And again, there's the let's get that down there. There's the high back in 2017, call it 20,000. There's the bear market, the 3-year bear market, exactly the same size as the other bear market that follows. We break through the 2017 high in call it December, November. Then we break through that 618 again, the 1.618 fib extension. We go above it and we retest it again. And to date, we haven't dropped below it. So when my guys are saying, are we in a bull market? Are we in a bear market? Well, yeah, let's look at the bear side first. So that's really interesting. Once we retest that 618, so far today, obviously everything can change, but as it stands right now, we've never gone below that again. So the key level for me clearly is 30,000.
Yeah.
Well, whilst we're above it, I'm probably I'm mid-term bull. If we break below it, hello 20,000. That's probably where I am. But just something else I found over the weekend. Let me just show this to you guys. Because that's not the Bitcoin top, is it? If it was. Okay. So if we go back to when is this? 2000. There's the top in 2017. And we come down and we start putting in these higher highs and these higher lows. 1, 2, 3 of them. If you come back to where we are today, here we are here. Assuming that's the top of 2021, let's assume that it is because it's 4 years after 17, so it should be. Here's these 3 higher lows that we put in at the same time. What's really interesting is if you put a 200 EMA on it, and you can see that the second leg up bounced off the top of the channel, if you like, and the 200 EMA so did it back here. So after the second leg up, we smashed into the top of the channel. We smashed into the 200 EMA. We came down. So number 3, let me just blow that up a little bit. Probably lasted a few days. Yeah, it's probably a couple of weeks in there. But if we come back across, I think we're exactly where we are now. There's the third level. We've done a couple of, maybe a week, and we've just broken down. So that's broken at the same time as this broke here.
Yeah,
I'm expecting, or I'm not expecting, I'm looking for this to play out again, and maybe this yellow. Have I got a highlighter? I hate these things. Where's my highlighter? Maybe this yellow thing comes down here, and I'm probably thinking we're down here. We mess around under here. We mess around under here, and we tag this one for a second time, and then off we go. But until that happens, who knows? I mean, what I do know is bull case. We're higher highs and higher lows on a macro. That looks like a bearish structure to me. And when you bring into the conversation everything you guys have just been discussing about the state of the bloody world at the moment, and all the easing and the tightening and the rate hikes, I don't see how, and the fact that crypto is a risk asset, I don't see how anyone can be bullish other than technically.
Yeah. Well, do you know where I sort of like start to get interesting? Bullish, no. But interested, yes, because where I think the crypto market is starting to create a potential opportunity is that we are a year after the last halvening. So that suggests to me that in a year, or maybe in a year and a half, or possibly 2 years, maybe, we're going to go through that spell, and we're going to start to rally again, because we seem to rally towards the halvening, and then we seem to be taking profit, almost straight after it. It's no different to stocks when they release dividends. Then as soon as the dividends are released, everybody sells it off again and sees if they can get a better price. So we're probably still quite early, just after that particular point. So this looks kind of inevitable that we would get this negative price action. And there are a lot of fundamentals that would suggest that authorities are after Bitcoin and everything else. But it seems like a lot of noise to me. And it seems like a lot of institutes have only really started to put their money where their mouth is. And it seems like it could be a way to create a better price for institutes to get in. Yep. So bullish or bearish, I think the overview and the longer term view on the crypto market, but specifically Bitcoin, is for a buy. And then it's just a question of which is the best price. Now, anything below the high is a good price, in my opinion. So where we are now, decent enough price. I agree with you. 30,000, I'll be getting back in again. 20,000, I'll be getting back in again. And I think the key is don't put all the eggs in the basket at the same time. Just see it play out, and if it turns at 30,000 instead of getting to 20,000, then you can add your extra positions on when you sort of feel confident we're in an uptrend. I
completely agree. Yeah, wait for a 30,000 bounce and buy the higher low, right, as a confirmation. Yeah. But yeah. I'm of exactly the same opinion. The one thing I'm really clear on is that regulation for Bitcoin is coming.
Yeah,
that's a when. It's not an if, it's a when. And when it comes, if you think about all the big guns, the Amazons, the Microsofts, and the Apples, and all these big guns that aren't exposed to Bitcoin, even some of the big hedge funds, even if they just allocated 1% of their balance sheets, of their wealth into Bitcoin, that's going to throw trillions and trillions of dollars at Bitcoin. And it's not even a trillion. That's not even $1 trillion market cap as it stands. I think it's about 800 billion. But when that day comes, regulation is just going to let so many of the guys that are a bit scared, that aren't probably allowed to because their shareholders will be unhappy. It's going to go mad.
Yeah,
I'm sure of that. When that is, I've no idea. Probably sometime in the next 2 years. But
is this chart and the conversation that you're having, is this, you're using this as the flagship for cryptocurrency, and I would understand why you would do that. So is it across the board that this space, this crypto space, is in exactly the same questionable area, or are things like NFT, things like I don't know how the altcoins are going or anything like that, but are they, let me put it this way, more buoyant at this point than the chart that we're looking at the moment?
I don't do a lot with NFTs. I don't understand them. Well, I do understand them. I think they're crap. I don't want anything to do with them. And you know what? It's not even that. I'm so busy trying to do everything else that I can't afford to clog myself up with NFT talk. We've got a guy.
Yeah, mate, I'm hearing you. That's why you're doing what you're doing, and I'm not doing what you're doing.
But we're talking. I mean, that was obviously the Bitcoin chart, and Bitcoin is king. It's still king. It'll always be king, in my opinion, because that's where the institutions will go when they spend money. They're not going to fly into Polkadot, and maybe they'll allocate.
That was pretty much my point.
Yeah, everyone's going to pile into Bitcoin, but this is an interesting one because this is the ETH Bitcoin chart, and whilst Bitcoin is the daddy, you can see that this ETH Bitcoin chart's been on an uptrend for quite a while. If we drag that back down there, I think it probably, it popped through and now it's trending on this. It confuses me. I don't know whether it's and ETH is really strong against Bitcoin. It must be, because it can't be everything else. It can't be the rest of the altcoins, because most of them, 90% of them, I don't think they're around in 2 years. I think we're heading for do you remember the .com crash in the 90s when everything got wiped out and only the tough survived? I think the Amazons and the big guys. I can't see how this can't go the same way. Bitcoin will survive. Yeah,
I couldn't agree more. And this is why it becomes really interesting to me. I mean, the thing with Ethereum is, as they move over to proof of stake, then it does actually start to increase the interest in ETH. And actually, if they do that, they are going to wipe out things like Cardano, Polkadot. If those guys haven't moved, they're going to wipe those guys out, because all of a sudden those guys just become redundant.
They're already wiped out to a degree, aren't they? I mean, Ethereum is the big second, number two. As long as their ETH 2.0, this as it moves over, works and the scalability works, I completely agree.
Yeah, I mean, I'd question whether it will. It seems like a big traverse to me to kind of just switch the button and. But anyway, that's a side point. I think the key is, with a bear market, you don't have to look for little opportunities, that the small companies that are going to explode, because the big companies, when things calm down, will explode, as we saw during COVID. All you had to do was go and buy Amazon and Apple, and you were going to make a great profit. So because we've got this situation going on, you can literally ignore all the other small ones, because I think your point is good, Jeff. But I think where we are is that those little things are getting obliterated. They're not getting hammered; they're getting obliterated. Forget about them, because they're done. And the ones that can absorb the move to the downside, like Bitcoin, like Ethereum. I struggle to find any others at this stage. I'm sure there are some.
There's probably about 10. 10
about 10, yeah.
Let me throw just one more thing into the equation, and you can poo-poo this as well. But what happens when, let's leave Russia out of it at the moment, but what happens when the central bank of wherever produces their coin? What happens to Bitcoin then?
Oh, that's a great question, mate.
We're talking about CBDCs, aren't we? Yeah, central bank. Which the
don't
Chinese
swear at me, Simon. Don't swear.
So I hate the word. I hate the word. I don't like. I can't stand this digital currency central bank stuff. That obviously the Chinese were always going to do it, and they've implemented the yuan. But yeah, it's coming, isn't it? I think you'll find that. I think it's USDC or one of those stable coins at the minute. One of the big guns, USDC, which is Circle's one. I think the Americans will adopt that as their central digital currency. When that comes, I don't want to use it.
This is the thing, mate. I mean, I think it's a good point, Jeff. But actually, they're still not doing what Bitcoin are doing because Bitcoin's decentralized.
Yep.
So you're still going to get all these central banks. Okay, they might be switching to digital, but that's just a transition, from paper to digital. It's not really changing. It's not really encroaching on what Bitcoin was created for. So in some respects, I don't know if it will matter.
Yeah, I don't either. What it will do, obviously, is it will allow them to monitor everything you do and everything you spend.
Exactly. Which people won't want, right?
They wouldn't want to do that, would they?
No, why would they want to do that?
Bitcoin needs more adoption. There's no two ways about that. Bitcoin, because the only problem with the CBDCs is that if the general person that doesn't really understand Bitcoin gets approached with this CBDC and thinks that is the crypto market, then they'll ignore Bitcoin forever. And only the people that currently know about it will keep using it. So, I suppose that would be the only danger, that it could ultimately make it obsolete in that way.
So I guess further to that point, then the central bankers have got a real reason to get to market quickly, haven't they?
They can't, mate. They can't. They don't understand it. They're scratching their head. They don't really get it. They're so late to the party that, to a degree, but they've got their eyes on other things. Bitcoin's almost become, they've even the regulation they're trying to do. They can't figure it out. Because Bitcoin and XRP actually is a really good example.
No wonder I can't then. They can't. Jesus.
No, mate, because what does it come down to? It comes down to who's got the best lawyers. And XRP's pockets are pretty deep now. So when it comes down to trying to regulate this stuff, they're not just fighting small fish. They should have tried that years ago. But now that these cryptocurrencies have got some big players behind them, even the governments are going to struggle, to do what they really want to do, which is close them down. It's just not going to happen.
No,
it's absolutely fascinating.
Yeah, we're on the same page completely, Ash.
Anyway, mate, thank you for that. I think we better move to George because we are just after the 1:30, and we need to hear what scientific method and approach George is applying this week. Thank you so much, though, Si. Fascinating stuff, mate.
Thanks, buddy. You're going to join us every Monday, right?
Yeah, probably Thursday as well. But I'll just sit in on Thursdays and chat if we're chatting. But yeah, I'll join you every Monday.
Brilliant, mate.
Days, mate.
Next Monday, incidentally, we haven't got a show because we are on bank holiday. Is that right, Jeff?
Yeah, I'm on bank holiday today, but here I am.
We'll be on bank holiday next Monday. So no show to the guys in the room. No show next Monday because the UK market is closed, and that makes me pretty bored. I can't do anything. So we're going to be off next Monday. So just
actually before we go further, and before I forget, to all the Aussies and the Kiwis in the room, if there are any, I think there's some Aussies in the room. Yes, I can see some Aussies. Happy Anzac Day, guys. For those of you who are not aware, Anzac Day celebrates, if I can put that in inverted commas, the efforts that it started as fallen soldiers from Gallipoli and that terrible occurrence many, many years ago. But it's now gone to every person who served in our armed forces, both as Anzacs, Australian and New Zealand Army Corps. And it's a big, big day. And those of you who are still sober, I hope you've had a great day. And those of you who are playing 2-up at the moment, heads. Everybody else, they got no idea what I'm talking about. There's this amazing tradition I think it started in the Aussie trenches, where they just throw coins up in the air. 3 pennies, actually, it started as. And it has to have a result, heads or tails, right? And that's pretty much the same as backing a fly up a wall. But guess what? The diggers did it, and it's a tradition that has carried on. I suggest you don't drink too much while you're playing 2-up, and this comes from personal experience. It's not a good plan.
I bet you're always throwing your coins in your pint, aren't you?
Well, you don't get the you do get to throw the coins. You can go into the center and be the coin thrower, right?
All right.
And you put a certain amount of money, say you put $100 in the center, and somebody's got to match that, and then you throw the coins. If you're backing a head, heads come down, leave your money in the middle, another 200 come in, heads come again, another 200, another 400 come in. So if you can throw 7 or 8 in a row, you've had a real good day. It's time to go to the bar. Piss off real quick.
Okay, mate. Well, obviously we're trying to be a bit more scientific than that. So let's bring in our scientist, shall we, and see what he's looking at. But yeah, happy Anzac Day as well. Yeah, I think it's something that we do need to remember.
Yeah,
Hi, George.
Happy Anzac Day. I was wondering what.
Thank you, mate.
Now I get it.
To a lot of people, it means a heck of a lot, and I think the tradition should continue.
Brilliant.
Not much the 2 up, just the remembrance. That's all. What's going on, bud?
Well, just Monday, last week of the month. There's a few things that I really pay attention to. Not last week, but last few days. Depends when the month is ending. So I just go back and look at my charts again and make sure that I've got all my key levels in place. And when you guys were speaking, I was just flipping through my charts to see if I can get the fundamentals behind what I'm seeing. And it's quite fascinating always how there is a strong correlation. I'm just going to put up a couple of charts. Then, the guys who follow this, we can pick it up and see what's happening on Wednesday.
I think that's a really interesting one, that one, George. Because when I look at that, I look at an S&P that is on a level of support with an inverted head and shoulders, which suggests we could actually see some buyers coming in here. And then I flip to the NASDAQ and I go, what? I flip to the FTSE and I go, what? And, you see some of the other kind of indexes just getting battered. Could you trade this long knowing what you know about the other indexes? I mean, if you took this just the chart, you might be tempted, but would you trade it long sort of knowing what you know about the other indexes?
Yeah, just by everything that you said in a minute says to me I should be looking long, right?
Yeah.
Because there's this tight bear channel here. We broke above it and it failed, which is not a surprise, created a lower high. And then Friday's follow through, big candle, but you're not going to jump in and sell, unless you're ignoring the low of this channel, unless you're ignoring the breakout point here. Double bottom, high low double bottom, breakout point by the bulls, so that can be tested. So the bulls have to defend that to demonstrate their strength. So if you were trading just the daily, I mean, I trade the 5 minute, this gives me information. If you're just going to buy here, all you need to decide is where you put your stop. And the best place to put your stop would be at any technical level. Okay, so the measured move of Friday's candle is down here. So that's a good place to put your stop, which is, pretty close to the low that we have here of the year, a couple of points beneath that, beneath the double bottom. There's many ways, you can look at it. So on the 5 minutes, when I go down to the 5 minutes, then I'm definitely going to be looking for any reversal pattern out of here to go long in the day, because that for me would be, that's the price that I want to get into. And where would I be looking to go? Or for me, the first target is here, which is the top of this channel. There's that failed breakout. But then if the bulls are strong, they really want to keep going up. But we have that lower high double top is a huge resistance that they can face. But immediately for me, on my time frame, huge opportunities for me to look at it short. And of course, my stop is much tighter. The low of the day measured moves, whatever I find at that low. But just looking at this without going to any other index, I would be saying look for longs. If we pop into the UK 100.
Oh, look at that. Beast. Still an inverted head and shoulders, actually. When we look at that, just much longer term pattern, but it's still an inverted head and shoulders there. Yeah.
But see, now there's a few things that I would also see. I mean, this trading range that was created here, okay, went sideways, the measured move of that. Remember, whenever I talk of trading ranges, always if someone breaks out of it, they want a measured move. There's a clear, strong breakout beneath that trading range, and the measured move is exactly where we are. So that would say to me, don't just jump in and sell, because you have that measured move from that trading range. If you look at Friday's candle, high, low, the measured move of that is also in that area. So there's multiple levels of support that have been created here. Now it's already moved a long way for me, and we are at the support level. So I'm not going to be looking to do anything, buy or sell at support. I'm going to have to probably wait this out and see how the day ends. Now, what would happen if we have a huge bear candle closing beneath those support levels? Well, that means the bears are strong. But whenever we have a break beneath the level of support, whether you see it or it's one of these invisible levels you've got to plug in, we must expect that at some point there will be a failed breakout and a pullback, which might create a lower high for us. So for me, on 5 minutes, it's unless I was up early to see what's happening, it's a little bit late to do anything for the day here. But then also we can't ignore, if you're just looking at it, I mean, this trading range, the high of the year, the low of the year, the midpoint, that's a huge magnet that can still pull the market down.
What price you got there, George?
So that's 7215. That's the midpoint of the year's range. Yeah. Well, what do you have on your FTSE?
Yeah, well, actually just below the monthly pivot. That's an area that I'm looking to take some profit. So yeah, that looks pretty good. I have to say, oil stocks and mining stocks are getting obliterated. Glencore's down 7% this morning. Anglo American down 7%. They're getting obliterated. That won't last. You know, they won't stay down there for long, but they are getting obliterated this morning. So yeah, I think you're right. I think it could well go down to that midpoint, and that's, I'm looking there for a potential bounce to the upside.
So I mean, if on the 5 minute, I mean, today I'm not going to do anything, but it depends if something sets up for tomorrow, whether we get a reversal, lower high, whatever. But that's a key magnet. If we break beneath these levels here now. Why would that be? What you're saying for me makes sense, because in here, if I was a bull, there's no way if I'm a long-term bull, I'm going to buy here. I'm going to wait to get to this magnet, right? And which is a midpoint, and that's where the bulls are going to come in with heavy defense and just try and create some kind of high low. And that's the place to buy if you're buying long. If you've sold anywhere up here and you're holding in, that would be a good place if you're patient enough to hold through whatever happens here to take your profits. Just one other one, just quickly, because I had some talk about gold, how I look at it presently. Now, if you look at, so remember one of the things I spoke about a couple of weeks ago, I was looking at the previous 3 candles. And if you just have a look at what's happened here, coming off this level, when a lot of buying into the close, so that's just trading range behavior. So this bear breakout beneath that, good for the bears, but they come into a strong level of support. So while we've had the move already today, I'm actually looking at gold to see if there's any reversal pattern of the 5 minute that I could take off there. And just for the day, it might come back and test the open, whatever may happen with the low, which is, beautiful enough profits on the 5 minute time frame. So I'm keeping an eye on that to see if I get a reversal out of that. Now, obviously, there's always the other side of the equation, right? This is a reversal trade. So I'm 100% certain it always works 40% of the time, because it's a reversal trade. A trend trade, 60%. But if
you should make Christmas cards with that on it, George.
Everyone will look at it and say, what is he talking about? 100% certain 40% of the time. Confuse everybody. But other side of it, if the bears are strong enough to break beneath this level of support, they're not going to go far, because there's still the measured move of the move of Friday, which is just here. There is this level here, low of March 22. So lots of support which still gives me the case that the low of a trading range, I'm looking for a bounce, which I can trade off. So that's just the kind of thinking that I have, which I'm going to work through all my charts. And
you sound more bullish on gold than bearish, George. Would I be right in saying that?
Yes,
Yeah.
because of this whole cluster of support that we have. You know, whether it's here or whether it's down here. I mean, it's all buying into the close. It's all for me. This is bull strength area. You just have to find the right way to get in.
I'm with you, man.
Short term.
Short term.
Yeah.
Look at the weekly. Look at the weekly.
Yeah, do you know, mate? I'm still bullish gold. I'm still on the bull side of gold, and I've started buying some of these mining stocks, and I'm going to continue to do so. We didn't get to it with Simon, but in a couple of weeks' time, we get to talk about some Pax Gold and see what you think about that as a company.
Just go a tad wider, George. No, that's tighter.
I mean, if I was a weekly trader, and I had to take a trade here at gunpoint, I'm gonna be buying. I mean, because of all of that and finding somewhere to put my stop somewhere down here.
No, I just need you to go a little bit wider. Because there's something on the left there that's very important information.
Sorry, like that.
There.
Yeah.
Now, what do you think long term?
Cup and handle as well, though, Jeff. I mean, there's a few. I think you could honestly make a case for. There's so many different kind of conflicting patterns here that you could make a case for either. And one of the reasons I'm thinking long is I still question whether the market. I don't know who's doing it, but you know, this whole idea that gold is an inflation hedge. I just can't see how that's all of a sudden gone away this year. I think it's there, but I think that there's obviously sort of the strength of the dollar holds it back. We just looked at the dollar yen, absolutely, it's unsupported up there. That dollar tanks, gold is going to fly, and I just don't, you know, I say I don't see how all of a sudden gold isn't an inflation hedge. You know, I still think it's there. I just think it's playing a bit of catch up for whatever reason. So, and I think there's a pattern there that would suggest that we could be actually quite bullish. But I know what you're saying. There is that double top, and there's also the case for the downside as well.
I don't know how it unfolds. Got absolutely no idea. Wouldn't have the vaguest idea, nor do I care. But if in 10 years' time I see gold at what 1,200 or whatever it is, 1,000, maybe 200, it wouldn't surprise me.
Yeah.
How it happens, no idea. Why it happens, no idea. But the chart's telling me that at some stage there's going to be a hell of a fall. Well, I mean,
if this appeared before me, sorry, you want to say something? Was that Simon?
Yeah, I'll just say, as Ash was saying, I'm just looking at that US yen chart, and that just looks like it wants to go, doesn't it? It's done.
Yeah, the dollar looks pretty. You know, we know the dollar's going to tank, and it could even get replaced at some point. It's just a matter of, you know, when it happens. I don't know. But I don't know. I'm only buying small amounts, but every time it comes down, I'm just chipping away at anything related to gold right now.
If this kind of pattern appeared before me on any 5-minute chart, I mean, I would not be doing anything within here on the 5-minute. Double top, remember I talk of waiting for 6 candles of separation. So, you know, that's good 6 candles. Then all I just want to wait is for a lower high here, or if we break above that higher high, trend reversal. So if this came up, I mean, this is the weekly, so it's a whole different ballgame. I'm gonna wait here, but the same kind of thinking. Wait up here, see if I get a lower high, or even if it breaks above, and sell it. And where would I want to see that going? If it was 5-minute, I'm just gonna bite my nails, and hopefully we get a break beneath this and a measured move all the way down here to 1,200.
That's your price, Jeff, right?
Yep.
So that's my kind of thinking. If this was exactly on the time frame that I'm trading.
And again, I hasten to add, I've got absolutely no idea fundamentally how that happens.
No.
Wouldn't have a clue.
No, well,
because it doesn't make sense. It doesn't make any sense at all.
Gold fundamentalists haven't got a clue what's going on with gold right now. It's just like, it is just, it's so confusing, you know, that the sort of things that you would have relied on previously just aren't now happening. But that always makes me a little bit kind of, I don't know. I start to question what I'm like. Hold on a minute. This isn't right. There's something not right going on here. Somebody is messing around with this.
Yes.
See, that the other side of the equation is if bulls are strong and all of a sudden, whatever the driver is, we get bull breakout above here, pullback, whatever. Bulls want to get to a measured move. They say we can get to 2.5 for this thing. But
Yeah.
then it all depends who's got the strength to break above that. You know,
Yeah.
Back.
I think also what we've got to keep in mind here is you're looking at 2 all-time highs there. They're not just any old highs.
Yeah.
They're
Yeah.
all-time highs. The market has never been above that level, ever.
Yeah.
So what has to happen to drive it above that level? Again, I can't answer you, but no
Well, I
idea.
don't know, mate. I mean, you know, you
Maybe
think
it's nuclear weapons.
well, I was going to say, you think a little conflict against a superpower in a little country would do the job, wouldn't you? But, I mean, it hasn't sufficed so far.
Yeah. But that's into whatever happens to do that. It's gonna then it's definitely strong. We'll smash through that. And
if it goes through there, look out.
Yeah.
So I'm just gonna pause there. That's my thinking. We'll pick it up and see by Wednesday what trades we've picked up and talk to the guys. And the live trading profits show 9:30 GMT.
When's that, mate?
You're on your second Wednesday of the month. You're having no sleep at all. Is that right? You've got your camping bag next to the computer, and that's
yes,
lots of coffee.
Lots of coffee. Keep my espresso cups next to me. But thanks to you guys for punting it. A lot of you guys are on it. So second Wednesday of every month. That's the Wednesdays at the market with George, free one. And then by subscription, third and fourth, if you're interested to stay awake with me, there's some coffee. Third and fourth.
That's brilliant.
Wednesday. Yeah.
Brilliant, mate. I mean, it's, I think the way you approach the market is it's so disciplined. I've not really experienced somebody quite as disciplined. And I think everybody, even if you're, looking to trade another strategy, I think that they will pick up so much from your approach, never mind sort of, the actual way
Agreed.
that you look at the market. I think it's a must, really. So we're looking at this Wednesday at 9:30 GMT.
Yes. GMT, which may not be London time because of time changes, but GMT, 9:30.
Okay.
All right.
Fantastic. Thank you, George.
Thank you, guys. Cheers. We will catch
mate.
up Monday after the Monday.
Monday after, you got it.
Yeah, Monday fortnight. You got it. See you, mate.
Super. Cheers. Take care then. Bye-bye.
Righto. Mate, are you kind of wrapped?
Yeah, I am kind of wrapped, mate. I could certainly go through some COT data and some seasonal data, but I didn't really see a lot this week. The only thing that really just edged a little bit, the pound looked a bit weak and the CAD looked a little bit stronger, but there's a lot of there looks to be a lot of confusion maybe or just there's not a lot of involvement. There's not as much involvement as there has been. This market is, we see it's turned, isn't it? So we said a few weeks ago it was turning. Something was going to happen.
Mm-hmm.
Now it's turned. So now it becomes really interesting again. But this wouldn't be, if you haven't got your positions on, this isn't the time to get involved. You
need to wait for a retracement, I believe. Yes,
you do. But the thing is, I'd be looking to long the FTSE from this position because it's come down now. So now I'm interested in the other side of it again. But I would not trade the retracement today. I mean, this is heavy, and as I say,
it looks red hot, doesn't it?
They're getting obliterated. The only stock that's up is Unilever, and National Grid. So that, and when National Grid is high, and it's only higher by a tiny amount, but when National Grid is higher, that tells you that there is concern. National Grid, those kind of those staple kind of things that you need. When Unilever is a staple stock, really, consumer staples. Those things that you need, that tells you there's concern. So not a time to go long the FTSE, but I will be waiting for that opportunity.
Okay, I've got a few things to look at before I retire. So if you're ready for that,
yeah, let's see what you got.
Okay, look, I think my favorite one of the week is Kiwi Yen. So we'll start with that. And the reason I like that is not so much because of the fact that we've got a game changer bar last week, but because of what preceded it. Bang, 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 bang. It don't like it up here for some reason. 86 handle, doesn't like it. I said to my guys this morning in the Telegram group that if you wanted to take a game changer bar per se this week, this was probably the one that I would prefer. I actually don't take one candle reversals. That doesn't work for me. Yes, I can see that we've got a double top here. Same thing applies. I can't just trade that on spec, although the reward to risk is pretty much 1-to-1 till you get to that level, which is representative of the monthly pivot. Much prefer to see this pullback, hit the weekly pivot, and then give me another one of these, preferably with a green body, and then I could look to trade it. Alternative, of course, is on the smaller time frames. Wait for a false break of resistance. You've already got the double top sitting there. That pullback to the weekly pivot makes perfect sense. There's also an ABC play on this one as well. You've already broken through another bar back to here, which again, it's the same thing, does get me interested. So I like Kiwi Yen short. Why would I be even thinking about a strong yen? Again, fundamentally, I've got absolutely no idea. But from a technical point of view, every single chart that I look at is telling me that the risk off currencies are about to gain some strength. And again, that could why do I keep saying nuclear weapons? I don't know, but because that's the most extreme thing I can think of to turn these markets around. But that's what I'm seeing. Pound Swissies come off. Pound yen has come off big time. And I know that's more the pound than it is the Swissy and the yen. Kiwi Swissies come off big time. Kiwi Yen's come off big time. What am I waiting for? Well, I guess the master of them all that tells me risk on versus risk off. And that is Aussie yen, but it's already gone also, as has every single one of these. The risk on currencies versus the risk off currencies are absolutely catapulting, like the indexes are, or the indices are. So we've reached support here on all of these, a pullback to the pivots, and I think I'm okay to trade these short now, but I may not get that. So the weekly game changer bars are all of these, the Aussie pairs against the Swissy, the yen. The only one that's really stunning me is Aussie versus the Kiwi. Something's happened to the Aussie today.
Well, mate, I mean, as I say, mining stocks, Rio Tinto, their main, the place they mine is in Australia.
Yep.
So, you know, if you're looking at...
They're falling off the perch, yeah.
They've fallen off the perch, and one of the reasons that the Australian dollar's done so well, I mean, you know, the RBA have been quite happy to sit on their hands because they're nowhere near as affected as the rest of the globe with inflation. So they're in pretty good shape. But one of the reasons they've been able to roll it is because of their commodities. You know, they've got the resources they have has helped the economy sort of like get through this stage without having to kind of give any kind of hint that they're going to be raising interest rates. But if you start to see a commodity sell-off and those resources start to devalue, if you like, inevitably the Aussie comes down because it's nowhere near the others when it comes down to interest rates. So unless they come out and say, actually, we're about to move, then I suspect the Australian dollar will probably suffer for a little while.
Well, all of this will put pressure on them as the pressure continues to mount on the RBA to raise interest rates. The other side of that, of course, which is related, correlated, in fact, is the inflation rate is still only 3. When I say only, it's outside the zone they're comfortable with. I think it's about 3.5%. Or thereabouts. That would be on the rise, of course. So the read next week should be very, very interesting. And I'm not sure CPI figures come out before the RBA meets. I don't think they do. If they did, I think you would find that there would be extreme pressure on the RBA to raise interest rates next week. Whether that happens,
mate, the thing that we forgot to mention, of course, is China. And that's why we're starting to see these things happen. China have locked down. The numbers coming out of China now are worrying, to say the least. So until China starts to turn around, the Aussie probably won't either.
Yep, fair enough. Last one I want to talk about is, of course, my favorite pair, the euro versus the Aussie. Now,
Euro
you're
versus
probably
the
going
dollar.
to think, the dollar, sorry, yes.
Yeah.
If I go to the chart, I'm going to probably throw a spanner in the works here because I see this in a buy zone right now. And again, once again, fundamentally, how I can possibly say that is absolutely ridiculous. But I'm not talking fundamentally, I'm talking technically. Now, I don't suggest you race out and buy euro versus the dollar right now. And if I use the dollar index, which is probably a proxy for this currency anyway, or this currency pair anyway, you look at that, you think, no, that's not coming down anytime soon. But you look at that and you think, okay, now I see that there's a strong resistance level coming up. And if this can possibly turn around, it may well do so in the next little bit. It's got to get through that level there. And if you look at this chart and look at the monthly pivot, we're at resistance number 3. And if you go back in history, you'll find that that does not happen often. Probably happened here, but it doesn't happen often, that's for sure. So this is getting to a point where it's attractive in terms of a selling point. I don't know where that is, frankly, whether it's there or whether it's at the highs here, which is 103.50. We're still 200 away from that, 200 pips away from that, or $2 if you like. So it's tough to be calling that. And it's exactly the same on euro versus the dollar. But the one thing I can tell you on euro versus dollar is that we are definitely at an inflection point. You know, we spoke about this inflection points a few weeks back when the pound versus the Kiwi was in exactly the same position as euro versus the dollar in terms of this is a monthly chart, right? It's not a daily chart. It's not an hourly chart. It's a monthly chart. So that level will be respected, as will this one if it hits it. But my point is this: don't think for 1 second that we can't get a bounce here and go back to the 114s, 115s, because there is a strong confluence area there as well. And even my old mate 113.60 comes into play there. So, you know, don't write this completely off. We've already had the end of a cycle. We're at the end of a cycle right now, coming very, very close to it. Again, what goes up comes down. It comes down generally in the same fashion if it does reverse. This has reversed from here. Remember a few months ago, we were saying this is a massive false break on the monthly chart. Bang, look what happened. Amazing. Don't write this off. This could actually happen, despite all fundamentals pointing in the opposite direction. I'm just waiting on a double bottom, bullish engulfing bar, head and shoulders, inverted head and shoulders, something of that nature to get me interested here. Now, of course, the opposite side of the coin, as always, there's two, has it going down to here. If it breaks that level, then this trend line becomes invalid. But whilst ever it's valid, I still think there's a chance for the euro dollar to rally. Again, don't ask me how or why or when, but it's there. It's staring me in the face, and I'm not going to ignore it. So I'm looking either for a false break, bullish engulfing bar, double bottom, followed by all of those things have to be followed by a higher low. And when that comes, I'll be looking to trade euro dollar long. May happen this week. I don't know. So that's kind of where I'm at, mate. Hanging on to the CAD with against the Kiwi and the Aussie. I think they're still valid trades, and I won't be entering anything else until I see something, which I can't at the moment.
Okay, mate. Well,
Apart from direction.
We've got. This is the end of the month. This is the end of the month, and then we're next week. We're going to be looking at the Fed announcement for interest rates, and that's going to put some pressure on the dollar. You know, how does it move from here? Is that 0.5% interest rate priced in? Yeah. Is there anything else?
Look at the charts, it is. Yeah.
Yeah, it definitely is. Is there anything priced in from the other central banks? Well, no. I mean, you know, the other central banks have been pretty quiet by all accounts. So they start to move and the dollar stays the same. That's when we might start to see the shift. they're not going to raise interest rates by 0.75. It's just, it doesn't seem likely to me at all. So it's probably going to be 0.5, and I think that's priced in. If they don't get there, the dollar's going to tank off the back of that. But you know, I'm not sure.
How often have we seen it lately? You look at the Kiwi last 2 or 3 weeks ago, a couple of weeks ago.
Yeah,
interest rates went up 0.5%.
Yeah,
and the Kiwi tanked like no tomorrow.
Yeah, well, I think could it be the same? Is it similar, mate? What Si and I were talking about with the Bitcoin halvening, and when you get that stock dividend, could it be the announcement happens? Everybody, that was what we were expecting. Now, then people sell it off. So yeah, you might well be onto a point there. So next week we might be looking at as a weaker dollar as early as next week. So then we'd be watching out for the euro.
Hell yes. This could all come together. You know, like I said, I don't know how, but that could be one of the reasons. Absolutely.
Yeah. Okay. Thank you, mate. Thank you to Simon as well. Thank you to George. Good stuff, Si. Si, 2 weeks' time, I want to talk about Pax Gold.
Okay, mate. Okay.
And yes, but the gold might well have got, actually 2 weeks might just about fit into that Fed decision. So gold
50. Wow.
What's that, mate?
I said 1,250. Wow, interesting.
1,250
for gold. I'm just stirring the pot, mate. That's all.
Yeah. Okay, mate. Thanks to the trading buddy. It's been a great show. Really enjoyed it. Thanks to the guys in the room as well. Have a great week, and we will see you on Thursday.
Indeed. Thank you all for being our trading buddies. Thanks, Si, for coming in. Thank you, George. And I will try not to be the invisible man next week. It's not next week. It's Thursday. We'll see you Thursday. Have a great week. Bye.